So this question is on equity, capital, and drawings. So here we must read the question very carefully. Rosie is the owner. She runs a business shop. On 1st April, this represents the start of the accounting period. Her capital account has a balance of 24680. This represents the balance brought down. Okay. Then the things happen during the year of 31st March. So from 1st April 2023 to 31st March 2024, this represents 1 year. So during this 1 year, three of the things took place. So the first one, she contribute her personal car. All right. So this is a capital contribution, which we'll do a journal entry here very quickly. Debit motor vehicle, credit capital. Okay. So this is the double entry for all owners' contribution. The second time, she took money out. All right, so she took cash out for her personal use. This represents the drawings. The double entry for drawing is always debit drawings and then credit the thing that was taken out. So in this case, it was cash in hand. The third one, she also took out flowers. Flowers is your business inventory. So debit drawings, credit inventory. Okay, so this represent the three transaction. So remember for this chapter, I just want you to remember very importantly these two things that you need to do at the end of every financial period. First, you need to transfer any profit or loss to the capital account, and then you also must transfer the total drawings from the above transactions. You are going to take the total and transfer it over to your capital account. Okay, so the double entry for transferring profit is debit income summary, credit capital. We credit capital because the profit belongs to the owner. We are going to add it to her account. The transfer of the drawings, total drawings of 1160, we have to transfer it to the capital account. Drawings will reduce your capital. Okay, so we are going to debit capital to reduce it, and then we will credit drawings. So when we credit drawing 1160, this has the effect of resetting the drawings to 0. In part B, they ask us to prepare the capital account. So we must first start with the balance brought down of 24680. So just be careful that you must have this starting balance. And then we are going to look at all the journal entry and see which one affects capital. Okay, I'm going to highlight them. So first one, we're going to credit 35,000 to our capital account. Okay, then next we are going to the next two are drawings related, so you don't see any capital inside. You see drawings, cash in hand, drawings, inventory, so we don't do anything to it. And then the last part will have your transfer, right? So you credit capital 18800, so this will put on the credit column in your capital account. Then you transfer the capital 1160 to your debit side of the capital account. So your capital account only have balance brought down, the contribution, and the profit as well as the drawing. So 4 lines only. Okay. So just very important that during the individual drawings of cash and the flowers, you don't actually go and touch the capital account. So for question 14, we have the different owner. Hui is the owner, and the accounting year end is on 31st December 2023, which means his accounting period is from 1st of Jan to 31st December. Easy to remember. So on these 3 dates, there were again 3 times where the owner interacted with the business. All right, so the first one, he brought in his own personal laptop for business use. So this is a capital contribution. So debit office equipment, because laptop is office equipment, credit capital. Next time, he took out things. He took out a box of macarons. I guess this is his inventory. So this is debit drawings, credit inventory. And then finally, he also took a business check to pay for his own family vacation, which is none of the business expenses, right? So we are going to debit drawings, credit cash at bank. So we don't really care what he used it for. Okay, so remember at the end of the financial period, we need to do 2 more things. Number 1, we need to take the profit and transfer it to the capital account. Profit has the effect of increasing capital. All profit belongs to the owner. So we will credit capital to increase it, and we'll debit something called income summary. Then for the total drawings, we are also going to add them up together, 6855, and this will be transferred to the capital account to reduce it. To reduce capital, we will minus capital by debiting capital. Then we will credit drawings. When we credit drawings, we will reset the drawings back to zero. So again, we are asked to prepare the capital account. So part A, the total drawings we already identified, 6830 plus 25. Then in part B, we are asked to prepare the capital account. So we just identify, is there any balance brought down? So there isn't. Then the next one will be actually your 2,500, which you credit into your capital account. And then you realize that the 2 dates below actually has nothing to do with capital. When we reach the end of the year, we will do a transfer of our profit and take out the drawings. So this one will only have 3 lines. Then you balance brought down to the next accounting period, which is 2024 1st Jan. Okay, the question 15 is an interpretation question. So very important. The first part is to understand that capital account is credit plus debit minus. Okay, so from here you can see that this is a contribution, owner contribute. All right, and then here you can have a reduction. All right, so you can see that this is the income summary. So this represent either a profit or loss. And the last one is your total drawings for the year. Okay, so we interpret like this. So here we can interpret the first one, 2nd July, owner contributed 6,800 into the business bank account. Okay, because we see cash at bank there, right? Then the next one, they also ask, is the 7902 a profit or loss? So we see that this 7902 appears on the debit side, all right, of the capital account, which means it's being reduced, which means that there is no profit, because if it's profit, it will be added to the capital account. Another way to see it is this is actually debit capital, credit income summary. All right, so from here we can see that this is actually a loss for the year of 7902. You can answer that for part B. And then finally, we also see that what is the statement of financial position, the amount. This will just take the final number. This is your part C. All right. And then last but not least, the accounting theory applied is your accounting entity theory. You must remember this chapter only have one important theory, accounting entity.